All right, guys. So let's go ahead. I'm going to break down the trades that I took for today. Now, I took those two opportunities. One that was actually pre New York Open. I'm going to actually focus primarily on the one after the New York Open as well. Now, number one, every single day, whenever I come into the charts, I check two things. I check the daily time frame and I check the 4 hour, and I start my day with that. I see too many people they try to take trades and they're not really aware what's going on the higher time frame. So for me, I'll go and start on the daily time frame. So now, what do we see on the daily? On the daily time frame, we're still consolidating, right? So not really much here. However, we did kind of fail to make a new high over here, and we started to break back lower. So when I look at that, I'm like, all right, this candle might just have an expansion move lower, and at the very least, maybe come down to from this swing low to that swing high. And if I kind of do the 50%, the 50% is right there, right? So that's kind of my thesis going into today, that we might just have a little bit of a move lower. Now, when I go to the 4 hour, that kind of confirms it even more. And on the 4 hour time frame, what do we have here? We have this breakdown that happened yesterday overnight. Then we had this fair value gap and this area of right here. So I'm just going to mark out that candle, right? Because we got that fair value gap closure. And then we got this in here. Now, on the hourly time frame, and this is the first trade. So let me actually talk about the one that we took in the beginning. This first trade right here was very, very simple. What do we have? We have a bearish EBP candle on the 1 hour time frame, and this candle formed right from 7 to 8 a.m. So pre New York Open. Now, I don't usually trade pre New York Open, but I was awake for some couple things, and I saw this. I'm like, all right, and you guys know when it comes to market structure, right? Look at this. We have this clear impulse leg, right? The market made a clear impulse leg. We have a clear level in here, right? Which is this fair value gap. And then we also have like this prior consolidation. So when I see this, I am then anticipating for the market. If the market rallies up in here, and there's a potential bearish setup for a potential lower high, I know that I can run this trade down into a potential support from the retracement leg. So when I watch this market impulse swing low to swing high, which is going to be this area, and I see a bearish confirmation in here, I know, again, even if the market doesn't completely tumble over like it did today, I know I can potentially take this next candle and run it down to a near-term support from this swing low to this swing high. So now, understanding that, this allows me to kind of then identify, okay, within this impulse leg, is there a potential target? And I saw this order block in here with that fair value gap. So this was pretty much my objective on this. However, when I look at the 4 hour time frame, I'll be honest. Let me extend that out for further. When I saw the 4 hour time frame, I wanted to see if we're going to make a lower low, and if we did make a lower low, could we hit this fair value gap on on this? So that's why I held this position going into the open just in case, right? So the entry was very simple on this closure in here on the 1 hour. When you go down to the 5 minute, you'll see that there was a very nice clear entry based off of this breaker point. So essentially the market had a push drop lower. We created this order block, which is the series of up close candles. So we have a essentially a market structure shift. We don't take out the low, but it's this wick low. But again, we have this fair value gap that's created with this potential order block. So I just pretty much sold right there on this candle. So I didn't wait for the candle closure. It was pretty obvious it was going to close as a candle, as a bearish EBP. So what do? I just pretty much wait for that little bit of a wick retracement. Stop loss is going to go above the candle that broke the structure or created this order block, right? Some people put it all the way at the high. I've talked about this multiple times. You save a lot more when you kind of do it like this, right? My first objective was down here. So right down here was already a 1.7R, but I kind of wanted to see, could we make a lower low on the 4 hour time frame? That was my lower low objective, and then possibly that fair value gap. So I had this as an open TP, 7.81R. Now, again, I personally did not. Once we kind of hit this, and this is the thing, during the market open, you'll typically have some sort of consolidation, and then I kind of kept adding onto the position as well. So after this entry right there, what do we have during the market open? The market open was 9 o'clock, 9:30, right there. Yeah, so the market open was pretty much right here on this opening price. Price pushes up, comes back into this area in here. I took another sell opportunity there on my other account and I let this one ride. I didn't, to be fair, I did not want to move this to break even as well because there's still a fair value gap here. But once the market kind of broke this overall structure on the 5-minute time frame, and the market open we had a swing high down to swing low. This became my new area where I wanted to kind of look for more sell opportunities, and pretty straightforward from there. And then we kind of made that new low. That's where I essentially took profit over here on both accounts. Now, this is what I want to also kind of refer back to. Let's just say you missed that and you're going to wait for the 10 a.m. open. And this was the better play, right? Because look what happens here on the close of the 4-hour time frame. Number one, do we have a clear objective? Yes, we have this clear downside fair value gap that has not been traded to just yet. What happens from 6 to 10 a.m. candle? This is the better setup. I wouldn't say better, but this is like this is a very clear setup because look what happens. We have a swing low, swing high, the market breaks down lower. We come back in here, we retest this order block, we close in that fair value gap, and then the market confirms with a lower high right in here in order to send us lower. So we create a lower high, and then we still have a potential target as well. So now what can we expect? If that next candle pushes up, we could expect another lower high somewhere in here in order to look for the sell opportunity to send us down to this fair value gap. And that's exactly what we did. So when we go down to the 4-hour time frame, what can we see? We see that we have this clear order block, this clear this prior bar low. When I go down to the 30-minute time frame and the 1 hour, we have essentially this whole prior consolidation in here, right? This whole prior consolidation in here, let's just again just put it over there, because we had this run up and then we broke back below, we closed below, clear potential structure. When we go down to the 30-minute, essentially the next 30-minute candle, all I was looking for was very simple. I was just looking for, and let me just mark out the 4-hour fair value gap. Okay, so again, we had the 4-hour EBP, we had the 10 a.m. open candle, and I'm looking for the PO3. So I'm looking for the next candle to open, rally into this resistance, and then have a shift lower. And then when we go down again to the 30-minute time frame, my entry was pretty simple. My stop loss though, so the entry was pretty much any rally up into here, as you guys saw in the screenshot, which was going to be around here. My stop loss was going to be the candle that broke the structural low, right? So look at this structure. This is the candle that broke it. So what did I do? I put my stop loss a few points away from here, just in case, right? I put it over like the box like this, just to give it a little bit of room, just in case. Again, and then this was 1.86R. Not the craziest risk to reward, but it was a very solid overall trade. Now, here's how you could have added to this. If you waited for a 5-minute confirmation, right? Again, I really like the setup, so I didn't mind taking it off the rip. However, on the Top Step account, as you guys have seen, I waited for this. So look at this. This right here is my confirmation on the 5-minute time frame, where there's a bearish EBP. Now, some people are going to talk about this, and let me remove this as well. Some people might say, hey, but are you not worried that this might kind of hold as support? To be honest, not really, because I didn't really care too much about this area in here because the framework and this trend is still bearish, right? We have a clear fair value gap to target on the 4-hour time frame. So when I have such a clean narrative like this is not going to really worry me that much. And to be fair, we kind of inverted it on this candle. Now, look what happens in here. This could be your confirmation entry, whether you enter on this 5-minute candle on the bottom of it, or you wait for some sort of retracement. This was just beautiful, because if you go down to the 1 minute, what do you see here? We have that 5-minute fair value gap. We had this prior low in here, which was that breaker, because we have swing low. The market takes out the high. We break down lower. We come in, and then we retest right here. And then from that retest, what happens on the 1 minute? Even this candle comes down. We also start to have a shift in price. So then we start to see even further bearish market structure on the 1 minute. And this is where I started really adding. So I added on this position in here, and then on the next candle open right here, because now the average, think about it. If you have an average, if you took the first entry, the front side move over here, then you add another position there, your average price is something around here. So whenever I can add, and then my position is going to be at break even with the ads, I'm typically going to go and add to my positions. Now, the next candle kind of opens. We don't really come back up in here, but again, you could just kind of just short that as well right at the candle open. You don't always have to wait for the market to come all the way back up in here, because you understand that this candle already broke the overall structure. And now, as long as we maintain as long as we maintain the bodies of these candles, we're pretty much in good standing. Plus, the target was right there. And then, as you guys can see, hits the 4-hour fair value gap. I got out pretty much right near the lows over here. Once we start to kind of break down on this candle, I just got out before the fair value gap. But yeah, overall, very solid day. And I'm going to show you guys pretty much the P&L. So on my Trader C account, so this is with Lucid. This is 5,000 53,388. The realized P&L is pretty much the 3,000 plus on the day, and then the Top Step account and here up $1,811. This one account is up 4,700 bucks. And these are the two that I took on the futures account. And then I took another position again, but those were on the CFD accounts. But yeah. So overall, extremely solid day. I'm pretty happy with it, to be honest. These are the types of trades that I really, really like. When you come in around 4 o'clock and then you have clear targets, you have clear structure. These are the trades that if you can focus on with some sort of like higher time frame, like direction, like a 4 hour fair value gap, a daily level, you get the biggest moves in those type of market conditions. And that's why I personally always prefer when the market has a clear target on the 4 hour and a clear target on the daily. But if you guys have any questions, let me know in the comment section below. And if you want more structured videos where I talk about all these different concepts, check the link in the description below, as I'm going to put a link to my main channel where I talk about all these different concepts in more of a traditional format.